My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, it's to educate, it's to teach, it's to put it in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Between the new antiviral drug from Pfizer, the one that cuts COVID hospitalizations and deaths by 89%, and the strong jobs number that cut the unemployment rate to 4.6%, with growth in pretty much every part of the private sector, especially leisure and hospitality, it is no wonder that the averages rallied today. Dow going up 204 points. S&P climbed 0.37, and the Nasdaq advanced 0.20%. Although you could have argued we should have rallied even more. And importantly, we were up much higher earlier in the day. Now, the great reopening thesis, which had faltered due to the Delta variant, has now made a comeback with a vengeance, thanks to the federal government pressuring people to get vaccinated. Anything related to going out and having fun is making a fortune. Witness the fantastic quarter from Airbnb or Delta Airlines, telling us that planes are rapidly starting to fill up. So which companies can play catch-up if Dr. Scott Gottlieb, our icon, is right that we're finally approaching the end of the pandemic? And when he said it, I just said, listen to this man. Fortunately, he repeated it. Yeah, within sight. He's true north. Can we find, for instance, the next Nvidia, a terrific stock we own for the charitable trust that you can learn about by joining the club, and one that we continue to love? Well, you know what we have to do? Let's go to the that's what we call it, the telestrator. Let's go to the telestrator for the game plan for next week. On Monday, we start with a stock that's been under tremendous pressure for weeks on end. PayPal. We're going to discuss the chart later in the day, but will it be crushed by a weak number like Square today? It doesn't look good given PayPal's ill-advised pursuit of Pinterest. Is that really because they're slowing down? I mean, a light and fun hobby site that seems like a bizarre partner for a financial services company. I mentioned Nvidia just now, but what you need to know is that the charitable trust also owns PayPal, and that's been a disaster. We bought higher and we bought here. Yet it's been a house of pain. So will it blow up even further? I don't know. I think it's kind of blown up already. But when I see a stock acting like this right before earnings, I have to be more circumspect. It's the way I am. Dan Schulman, the CEO, already warned us this would be a tough quarter because of PayPal's final separation from eBay. But it's already down more than 80 points, which to me seems overdone. But the way it acted today was horrendous. How about something that's overdone on the upside? And that's what many professional money managers think of AMC Entertainment, which reports Monday night. Now, I'm constantly asked if this movie theater chain is really worth 41. Do you really think it's worth that? And that's where it's currently trading. Given that it sits on a mountain of debt, you really can't believe it's at 41. I come back and say you can't value AMC like money managers would because the shareholder base is full of individual investors who love the darn thing. They love the popcorn, for heaven's sake. 41 can be justified. I bet CEO Adam Aron will do a great job on his call, and the individual investors will buy even more. So the stock will hang in because he knows how to give his shareholder base what it wants. He represents a new form of capitalism, frankly. Now, AMD, long a favorite, has an event on Monday where it will debut some of its latest technology for the data center, and I expect CEO Lisa Su to totally rock the joint. I think AMD is well on its way to eclipsing Intel in market capitalization. I can't believe I just said that. How the mighty have fallen. Speaking of semiconductor market caps, Nvidia, which is now the largest chip maker in America, hosts its annual user and developer conference called GTC, where CEO Jensen Huang should tell an excellent tale of a product pipeline that seems to touch every exciting end market in tech: autonomous cars, gaming chips, even the metaverse, although Nvidia calls it the Omniverse, and it was first. Be prepared to be dazzled. Watch it. I watched it on tape last year. I learned so much. I had to watch it several times, though, because I'm not smart enough. And it's not humility, it's truth. No one's smart enough. No one. All right, Tuesday, we hear from another investment club name, and that's Wynn Resorts. Like PayPal, I'm pretty much resigned to this being more of a long-haul play than a short-term winner. Once gambling comes back in Macau, which is what I'm waiting for, that's the Las Vegas of China, then this stock will soar. Until then, pain. And I don't think it'll be any different when it reports. After the close Tuesday, we hear from two new fintech names, Upstart and Coinbase. The action cryptocurrency has been pretty exciting of late, so that should send Coinbase higher, even though it's been going up. That said, they need to drop the arrogance. They got to get into chill mode, like me and Scotty Wapner. As for Upstart, they're the artificial intelligence-powered lending platform that makes credit scores obsolete because it does a better job. Wells Fargo, run by Charlie Scharf, he really understands numbers and technology. They just hired him. But you know what? I hope to make sense of what's going on in the conference call because I really don't still understand exactly how they are doing what they're doing. Then there's Doordash. Now, this morning, Uber told a great story that included how it's now a dominant player in the delivery space. I wonder if Tony Xu from DoorDash can do the same. We know Uber's delivery business is still thriving, even as the pandemic winds down. So I bet DoorDash can blow the doors off when it reports. Wednesday starts off with Wendy's, okay? Our favorite quick-serve chain. And by the way, my wife scarfed down a burger there about 5 hours ago in the LIE. There's one in the LIE going toward the city that is so good. But she did not have the Baconator, so maybe she's showing some restraint. Now, I think that this Wendy's call may not be as good as the McDonald's call, even though I like the Wendy's burgers more than McDonald's. But you remember, I'm not a millennial. I actually look at the numbers. Whew. Now, after the close, we hear from Dutch Bro. I heard someone on air say Dutch Brothers, and I was thinking, Dutch Brothers. I mean, like, he sounded like me when I met my daughter out in Oregon. She said, oh, so what is Dutch Brothers? She says, Dad, you're an idiot. But boom, it's Dutch Bro. And that's the coffee chain that's one of the hottest IPOs of the year, Dutch Brothers. Clueless. All right, this is a terrific regional and national growth story. You can put their highly caffeinated kiosk, try the Annihilator. You won't sleep for 3 days in the middle of any parking lot. Something that can revitalize a down-and-out shopping mall. I just worry that the stock's expensive, although pull back from its highs this week. I am enamored of it, though. After the close, oh, look at this one. Disney reports it's going to be rough. The theme parks weren't working at full capacity, Delta variant. Shanghai Disney was shut down this past week, stranding 33,000 people because of one person with COVID. The movie slate's good, not great. Disney Plus seems to be slowing. Time for something new. Now, what have I been pushing? I've been pushing a virtual reality fest where you go to a world inhabited by Scrooge McDuck, or maybe, just maybe, this is my new one for them. If they use it on the call, credit me. Maybe you go and you find the killer of Bambi's mom, and you bring him to justice. It's an idea. All right, I don't think CEO Bob Chapek will give that exactly to us, at least not exactly that graphically. But I'm looking forward to the call as we own Disney for the Charitable Trust. It's looking okay lately. It was up 5. Here's a good one, MasterCard. They got an analyst meeting on Wednesday. This stock is sold off in part of the exodus from old fintech, although it bounced hard today. More on that later. MasterCard's another charitable trust name, so we'll give Investment Club members a rundown on the meeting once it happens. But what matters is that this is a play on commerce and cross-border travel. It is not a play on what a firm does. It's not. Get a little emotional. Thursday's quirky. We've seen an incredible rally in all things mall, right? I mean, from Tanger to Simon to everybody in the Tapestry reports. Now, that's formerly known as Coach, and I don't know if it can summon still one more day higher. I think we'll get good news, though, and the stock could quickly surge 7 points to a new 52-week high. Let me throw in Ralph Lauren. That should go to its 52-week high, too. It was down 12 the day I reported. That was stupid. We also heard from Yeti, which makes high-performance outdoor gear. Now, we've been championing this one since 16. It hit a new high and closed at 107 today. I love the line extensions from the Simple Thermos, even as something it's a pandemic play, because people felt safer spending their vacations in the great outdoors. To me, Yeti's become much more than that, and that was brilliant. They got their name out during this period, and now they're selling a lot of different things. Friday, we get results from a drug company that had an early vaccine for COVID, Astrazeneca. It's gotten lost in the miasma of vaccine makers because it wasn't as good as the other opponents. I think they're better fish to fry. Finally, we've had so many new IPOs that I regard as really basically branding exercises, great ways for the public to learn about a story, and I think somewhat, maybe not much more. And that's how I see Warby Parker, the hipster glasses maker, which I warn you away from, but I'd love to be proven wrong by a great quarter. Could easily happen. Usually the first quarter out of the chute is a good one. Here's the bottom line. We need to see if this rosy action can hold up through next week, a period that historically tends to produce some ugly sell-offs. By the way, Larry Williams, the guy who told us to sell today, remember, he said buy the last week. He sold today. He's done. What a call. One of our best ever that we've had on the show. But if the earnings stay strong, well, I think the stock market could stay strong, too. I need to go to Chuck in New York. Chuck.
Hey, Jim, how you doing? I'm here with my 2 sons. I got Charlie, age 14, and Andy, age 9. Charlie, you got something to say to Jim?
Booyah, Jim.
Booyah, Charlie.
And Andy, what have you learned from Dr. Cramer?
Apple, don't sell it, buy it.
Yeah.
Kid's got horse sense.
All right. My question is Marvel. I sold it at 53, thinking that it was going to dip, and then I was going to rebuy. I was going to buy it again. But Marvel, it just keeps going up and up and up, and I want to buy it. Should I?
All right,
should I
Chuck, Charlie, and Andy, listen and listen good. Marvell first moved into 5G, and then they went to high-performance computing. Do you know they're moving aggressively into autos right now? The hottest market in the world, and believe me, they're part of the solution, not part of the problem. I like all three of you, though, and the Apple horse sense kid, Andy, he'd be my man. Hey, Andy, I'm going to see Billy Joel tonight. Are you? Anyway, all right, look, what do you think? Separated birth? All right, we're coming into a period that tends to produce some ugly sells. But if earnings stay strong next week, I think the market can stay strong too. Even as I said, Larry Williams has now exited his trade, one of the best we've ever had on the show. On Mad Money tonight, Carvana had a wild ride today after reporting a mixed quarter. So I'm getting in the driver's seat with the CEO to get a read on the report and the state of the used car market. Then the payment stocks have just been horrible. So what do we expect of PayPal and MasterCard? I'm going to go off the charts to find out. And, well, I'm yelling timber. Yeah, that's right. Anyway, don't miss my exclusive with the CEO of Weyerhaeuser, fresh off their third quarter report. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.